Well, we got a second hot inflation read. Again, remember yesterday CPI came in hot. Today PPI came in hot, producer price index. But the bond market is reacting very differently than many might have expected. And in fact, with our second hot inflation reading, you would have expected the bond market interest rate to go higher. If you did, you would be wrong, at least at the start of the morning. So let me try to explain what's going on. Let me give you the bigger picture, why I think the bond market is actually behaving, frankly, correctly. And it really has to do with what's important to the Fed and, frankly, what is not. Let's get into the details. PPI, the second of three inflation readings, producer price index, came in all kinds of bad yet again. Remember CPI yesterday, all four of the metrics were higher than expected. Today, PPI, three of the four metrics were higher than expected. So the details. Headline, PPI, 3.5. Expectations, 3.2. That's a huge miss. How about core? Core came in at 3.6. Expectations, 3.3. So again, 2 days in a row, we have headline and core numbers on a year-on-year basis being significantly higher than expected. So how can rates go lower? Well, Powell said it yesterday. One of the many quotes I have from Powell and Goolsbee and Bostic, which we'll get into in a minute, I want to read this one specifically to you. Powell, we target PCE inflation, which is a better measure. We have talked about for years now on this channel that the Fed cares about PCE and specifically PCE core. So how can the bond market show significant weakness in rates today when we've had four bad readings on inflation, right? Headline, core, CPI, PPI. Well, the fact is that PCE, as we have shared many times on this channel, is actually a calculated number which takes inputs from CPI and PPI. Now, it is not perfect, but for the last year or so, people have been able to take the inputs from CPI, PPI, do the back of the napkin math, and actually calculate PCE fairly accurately. So what does all this mean? It means that given the data from CPI and PPI this morning, it is actually expected that PCE will go down. So while consumer prices, while producer prices are up and up meaningfully, it is expected that given the inputs from those two inflation metrics, that PCE will go lower. And the bond market is betting on that in a big way this morning. That's how you can have rates down, 7 basis points when I checked this morning. So little back of the napkin, inside baseball kind of highlight for you there. Again, they can be wrong. I mean, they have been wrong before, but they've been fairly accurate on PCE the last year or so. Let's talk about weekly unemployment claims. Again, this is a number you and I get every Thursday. It is still trending in the low 200s. Came in at 213,000 this week. Expectations were for 217, and last week was 219. So lower than expected, lower than last week. More importantly, continuing claims. Continuing claims, I believe, peaked at 1.89 million, now down to 1.85 million. My big fear for 2025, again, is not a mass uptick on the unemployment rate. It is not even necessarily a big uptick in weekly claims. It's actually one of duration risk. And the best way to measure duration risk, if I'm right, is by watching continuing claims. My big fear for, call it October, November, December of 2025, so 8, 9, 10 months from now, is we're going to have continuing claims knocking on the door of 2.8 to 3 million. I think duration will be interesting to watch this year. Let's go through some Fed speak. The Fed was out talking yesterday after that nasty CPI reading. We had Fed President Bostic saying we could get to 2% inflation by early 2026. And at that point, we want to be close to neutral. So what does that mean? Well, it means a couple of things. It means that Bostic wants some cuts this year. That's what that means. I have another quote from Bostic below we'll go to next. But basically, Bostic thinks that we want to be neutral when inflation is 2%, not after. So based on Bostic's quote there, he wants to cut before we're at 2%. So let's go to that Bostic quote that is probably most meaningful. Next, he said he believes that neutral, this R star, whatever you want to call it, where it's not restrictive or expansionary, neutral is likely around 3.5%. So again, if you take those two quotes and put them together, what is Powell telling you? Or Powell, what is Bostic telling you? He's telling you that, hey, we expect to get to 2% inflation in Q2, and the Fed funds rate will be 3.5% or thereabouts next year. That's what he's telling you. So if you net that out, Bostic is out there saying he wants 3 cuts. 3 cuts, probably most this year and maybe one early next year. That is what Bostic is saying. How about Goolsbee? Goolsbee, today's inflation data is concerning, but it is just 1 month. To which I tell Goolsbee, dude, look at the chart. Headline inflation has been up 4 months in a row. This is not 1 month. You know that. Stop lying and admit that there is a trend that is not beneficial. Powell, we are not in a recession. I think he's right. Is it possible that the Fed will have to move policy rates on tariffs? Yes. And again, what is Powell telling you there if you're not paying attention? It means that the Fed may raise rates. Again, right now, most of the market thinks the next move is lower. What Powell just told you right there is the next move might be higher if tariffs take effect and bring inflation with it. Powell, the Fed cannot control long rates, to which President Trump, Scott Bassett agree. Remember, Scott Bassett, President Trump are focused on the 10-year, the long end. The Fed does not play there. Everybody knows who controls what, so now we can focus where focus is. Lastly, Powell is talking about commercial real estate has a lot of embedded losses, but does not seem to be getting worse. To which I say, wait. Again, something I think is coming down the pipeline, unfortunately, is with rates staying higher for longer and banks finally giving up on extend and pretend, we could have some watershed moments where people's balance sheets get wrecked and we are forced to see 50, 100, 200, 300 bank acquisitions, mergers, whatever you want to call them. When this commercial real estate goes bad, and it will, it is going to cause injury and some pain. It does look like President Trump is announcing some meaningful reciprocal tariffs today. Again, hopefully by now we have realized that we don't need to read the headline. We need to read the details. What is the tariff on? How much is the tariff? Who is it against? When does it go into effect? Because all of that will tell us is, are we just negotiating again? Is it about getting fairer trade? Or are we starting to design lines of what we want to bring home for manufacturing? Again, some of these tariffs that will be coming will be clear shots across the bow that says, thou shalt make this in the United States. And some of them are just going to be negotiations where we try to get more fairer trades with our trading partners. Don't overreact to the chaos of an announcement. Look at the details, get into the details, and try to play chess. This is not checkers. This is a big game we are playing. I stand by my call that the first 6 months of this presidency will be chaotic. You and I will not understand the chess game being played. So don't get distracted. Don't get distracted. We did have a couple of earnings come out in the last 24 hours. 24 hours or so. Cisco beat top line, bottom line, raised guidance. They actually said that Splunk one of their acquisitions, was actually accretive to earnings sooner than expected. I brought that up because my last job was at Splunk as a sales guy there. So looks like the Splunk team is already contributing to Cisco Systems. If anybody you're out there, congratulations, you did it. And it's funny, we were always talking about a Cisco acquisition for years, and it finally happened. Chevron is in the news saying they're going to slash 20% of their workforce. Ouch. That's about 9,000 people. And they were looking to reduce costs by somewhere between $2 and $3 billion. Wow, that's a big number. Reddit came out with beat top line, bottom line, but actually indicated that some Google algorithm change impacted users, meaning probably they're getting less expected users to the Reddit site. So it's hard to run a business where somebody can just change the algorithm and you lose. Bank of America CEO says retail customers are spending 6% more money in the first 40 days of this year when compared to last year. That's meaningful, folks. Again, something we've talked about on this channel, we've pontificated, we've thought, we've felt, is there's just a general vibe shift out there. I would argue that consumers are spending 6% more, probably a signal that that's a correct feeling, right? 6% is meaningful. And again, it is the first 40 days of the year post-election, a little bit before inauguration, because I think that was on the 20th. Bank of America CEO, interest rates aren't going anywhere soon. Again, I think we talked about yesterday, Bank of America being one of the institutions that says 0 cuts in 2025. It is estimated that the car manufacturing, or like Ford and GM, will be in the crosshairs of the steel and aluminum tariffs. It is estimated that new cars will cost $6,000 more. It's actually $5,780 more, if memory serves. I think that's interesting, because what might happen because of that is used cars also might go up, right? Because if new car prices go up, maybe people can't buy new cars, so they buy used. And guess what happens when you increase demand on used? Bingo, bango. Used prices go up as well. And if you remember the CPI reading from yesterday, used cars was a significant portion of the increase. I have not looked at the Fed Watch tool this morning. I captured these following numbers before PPI. I would guess that all of these numbers changed, but I'm going to go through them anyway. Again, this data was yesterday, not this morning. The odds of a March rate cut after CPI were 2.5%. The odds of a May rate cut were 13.2%. June, 22.8%. July, 41.2%. And finally, September, right? Finally, September was 55.9%. It would not shock me, given PPI and, again, the read through to PCE, that maybe the odds of a July rate cut have risen, maybe north of 50%. But I think assuming any rate cut before July is misguided with what is going on here. Bill Adams, chief economist at Comerica, said the Fed will see the hot January inflation reading. Oh, gosh, wow, more coffee. The hot January inflation reading as confirmation price pressure is bubbling beneath the surface. Again, if you have a read through to PPI this morning, I think that highlights even more that inflation is bubbling below the surface. And that is before any impact of tariffs, right? We got to remember that. Tariffs is a wild card on top of these readings. The 10-year note did spike north of 4.6 today. Again, this morning it's down more like 4.5 something. So again, we are seeing a better read there. What else do I have for you? Let me take a look. Yep, I think I got everything. Remember, folks, our event kicks off Saturday and Sunday. You do have the option of buying a virtual ticket. We sold 35 of those. Honestly, I thought we would get to 50, and we still might. You're going to want to watch this. You know, there's an agenda on Eventbrite you can check out. The reason you're going to want this is because for $99 virtual ticket, you will also get the replay. It is not lost on me that I personally would not sit through looking at my computer for 16 hours. But if you gave me the replay after, I would certainly watch that. So that's what I will do for you. Again, exceeding expectations. If you bought a physical ticket and you're in Vegas, you will get the replay as well, of course. But if you buy a virtual ticket for a measly $99, not only can you watch it live, but you also will get the replay. So again, go buy your virtual ticket. It is on Eventbrite, $99. I do hope we get to 50 tickets because I like to cover the cost of an additional cameraman and an additional computer running this. But hey, if it doesn't happen, it doesn't happen. I'm excited. I head over tomorrow to set up. And if you're going to be in Vegas, I look forward to seeing you there. So guys, have fun. Smile. It's going to be a good day. Guys, don't forget tomorrow's Valentine's Day. You know, I'm looking out for you. Don't forget, do something nice. Take some pictures, make some memories. Have fun. Later.